to the very analyst who's been saying Zynga will go public tomorrow. Nitsan Hargil of GreenCrest Capital Management joins us now from New York and has been told by a, quote, major investor that the social gaming company is trying to raise more than $1 billion in its IPO. Nitsan, thank you so much for joining us. So tell us, first of all, what do you know and how did you come by this information?
Well, I had a conversation earlier today with one of the VCs, the early VCs in the company, and they spoke to someone at Morgan Stanley who mentioned that the S-1 will be filed tomorrow. So they won't be going public tomorrow, but rather they'll be filing for an IPO tomorrow.
Now, what kind of growth numbers are you expecting to see in Zynga's S-1 filing?
So we have Zynga's revenues last year in 2010 at $850 million and growing up to about $1.5 billion this year. That's about 73% growth. We're seeing about 50% growth for the following year. It's a company that truly does have staggering revenue numbers. We're looking at it to reach revenues above $4 billion by 2013. And about half of that, as much as half of that, will be profits. So you're looking at a company that could be throwing off as much as $2 billion in cash each year starting in 2013.
Now, you say of all, Nitsan, you say of all the tech companies that you're looking at, this is one of the most exciting that you've seen in a long time. Why is that?
Because we are seeing a bunch of companies who are coming to market and they're still losing money, still overspending on capturing customers, really being out of control with their spending in order to try and get those early customers. Here is a company that has managed to do it. It is bigger than, it is 6 times larger than the number 2 competitor. It is as big as virtually all of its competitors combined. And it is dominating a space that is extremely profitable. They're doing all this on capturing revenue from just 3% of their customers, a number which we expect will grow sharply from here on in.
All right, Nitsan, I want to bring in our editor-at-large, Corey Johnson, who's been pouring through the filings from Pandora, LinkedIn, Groupon over the last few months, and will certainly be looking at Zynga's as well. Corey?
Yeah, Nitsan, let me ask about how this compares to what we know about Facebook, because it'll be very interesting when this filing comes out. I'm staring at my screen hoping it comes out now, but the discussion of how Facebook takes a 30% cut from all of Zynga's revenues, but it's straight revenues, but it sounds like you think Zynga's actually taking a big percentage of all the revenues that Facebook's generating.
Exactly. We think that Zynga is probably the largest customer, bar none, of Facebook. With as much as 10% of their revenues. Zynga currently spends about $150 million a year advertising on Facebook each year, as well as that 30% take that we spoke about, that this year alone could be valued at about $500 million. So we could be seeing Zynga alone giving about $650 million to Facebook this year alone.
Wow. Nitsan, in your note, you said it was July 15. Now you're telling us that you think it's tomorrow. Why the discrepancy?
Got a phone call from an early VC in the company who heard from Morgan Stanley that the filing will occur tomorrow.
Well, I heard you say that before, but is that subsequent to publishing your note? You got that call, so you have this from 2 different sources?
It is subsequent to the note that I published was published on June 23rd. I have since gotten an update today.
When this deal comes out, talk to me about the timing of these kinds of deals and doing an IPO in the summer.
Well, you should expect at the very minimum a 3.5-month wait until the actual IPO, more likely 4 to 5 months. So I think in this particular case, we're looking at an October or November IPO.
Nitsan, Zynga has made quite a few acquisitions over the last year. Do you expect that pace to continue?
They've really been exceptional. We've seen them accomplish 14 acquisitions in the past 14 months. And we don't expect that to slow down, actually. It has been a core strategy of theirs to really buy up not revenues, not customers, but rather just talent. Every time they find someone who is able to come up with a nice technology and a nice software, they go ahead and put that and try to acquire them.
And it has been called a war for engineering and designer talent here in Silicon Valley. Nitsan Hargil from GreenCrest Capital, thank you so much for joining us and giving us that scoop.
Thank you, Emma.
Now up